Hello again, dear students. Welcome to the class Fiscal Laws of Bangladesh, Law 434. This is the second video number 2 for the introductory class. As in the first video, I was discussing that taxes are of two types. One is direct tax, another is indirect tax. So for direct tax, to govern direct taxation, raising of direct taxes, there are laws like Income Tax Ordinance 1984, Part 1, Income Tax Rules. Part 2, there are another instruments called Annual Finance Act. So every year there are a lot of changes brought in the direct taxes by the Parliament. So Parliament brings those changes through Finance Acts. So Finance Acts are also the source of direct tax legislations. There are Income Tax Rules, as I told you, Income Tax Rules Part 2. Circulars, notifications. Sometimes there are circulars and notifications from the National Board of Revenues. National Board of Revenue is the highest body, is the apex body to administer both direct and indirect taxes. Note that is the institution is the National Board of Revenue. So National Board of Revenue sometimes issues circulars and notifications. Those constitute the source of direct taxes law. Another important source of law is the legal decisions of the courts, that is, the precedents. Whenever the court decides cases, the court creates law by deciding the cases, by delivering the ratio decidendi of the case. As you know that from jurisprudence, that ratio decidendi is the reason for deciding. So the basic judgment, the important issue in the judgment for which, on the basis of which the court gives the decision is called the ratio decidendi, reason for deciding, and that becomes a law to be followed by the lower hierarchy in later similar cases. If you remember the cases like Balfour and Balfour 1919 others, that those constituted precedent for the generations to come and also for the lower hierarchy. Precedents also form a part of the sources of direct taxes in our country, in Bangladesh. For indirect taxes, as I told you, there are for direct tax, some other laws are there. This Gift Tax Act 1990 and Travel Tax Act 2003. You will find all these references in the PowerPoint presentation. Indirect tax legislations, there are Value Added Tax 2012. Basically, value added tax was introduced in 1991. Then in 2012, another new law was drafted and it came into force in 2018. There is another act called Customs Act 1969, and that is ongoing. 2014 new act. There is another Excise and Salt Act 1944. All those deal with the indirect taxes on consumptions by the taxpayers. The administration of direct taxes is looked after by the National Board of Revenue, as I told you, the apex body of tax administration in Bangladesh. The NBR is empowered to make rules for carrying out the purposes of the Act. So again, remember the National Board of Revenue is the apex body. Now, as I told you earlier, the levy of income tax in Bangladesh is governed by the Income Tax Ordinance 1984. We shall briefly refer to this as the ITO. It means that Income Tax Ordinance. So if I say ITO, it means that Income Tax Ordinance. Income Tax Ordinance came into force on 1st July 1984. The ordinance is Part 1 and Part 2 of the IT manual, contains 187 sections and also 7 schedules. These laws undergo changes every year with additions and deletions brought about by the Finance Act passed by the Parliament. These are important for you to remember because of the multiple choice questions and class test. So please listen well and memorize those. In persons of the power given by the income tax ordinance, rules have been framed to facilitate proper administration of the income tax ordinance. Now, as I told you that income tax is levied on the income of the taxpayer. Taxpayer is called in the income tax ordinance as the assessee. Assessee, whenever I say assessee, it refers to the term taxpayer. So income tax ordinance imposes income tax on the assessee or the taxpayer through some legal mechanism. The first one is that charge of tax. Charge of tax. Charge of tax means under what authority tax is charged on a taxpayer. So if you go to the income tax ordinance, you will find that section 16 of the income tax ordinance, section 16 of the income tax ordinance deals with the charge of tax. Section 16 of the income tax ordinance. Please go through section 16. As I told you that you will find the income tax ordinance on the web, www.nbrbd.org. So you will find the income tax ordinance there, 1984, and you go to section 16 and you find charge of tax. Another important issue is that while discussing law, we need to define some terms. Section 2 of the income tax ordinance defines, gives some definitions of specific terms. So we will not memorize the definitions of the terms. We'll refer back to section 2 as and when necessary for our discussion. So as I told you, section 16 of the income tax ordinance deals with charge of tax. It says that income tax is levied on the total income for the previous year of every person. So previous year of every person. So section 16 basically says that income tax is charged at the rate or those rates as prescribed by the Act of the Parliament. Please note, whenever I say section 16 says that income tax is charged at rates or at those rates as prescribed by the Parliament. So it says that income tax will be charged on you or on the assessee at the rates as prescribed by the Act of the Parliament. So whenever I say Act of the Parliament in section 16, Act of the Parliament refers to the Finance Act. As I told you earlier, that Finance Act contains all the necessary changes every year passed by the Parliament. So Act of the Parliament, i.e. Finance Act, says at what rate taxes will be charged on a taxpayer in a given financial year. Financial year means income year. Income year means that the year in which you earn your income, and tax year or assessment year means the year immediately after the income year. So for example, you want something from 1st July 2019 to 30th June 2020, that is the income year. So your assessment year or income tax year will be from 1st July 2020 to 30th June 2021. So that's how we determine income year or accounting year and assessment year or tax year. So by now we are clear that how tax is charged under the Income Tax Ordinance 1984. Now, once you get the law that income tax is charged under section 16 of the Income Tax Ordinance 1984 by dint of the provisions as contained in the Finance Act, the next question is that whenever the income tax authority wants to impose tax on the assessee, the first thing is to do is to identify the status of the taxpayer. So what I say is the status of the taxpayer. Now, what do we mean by the status of the taxpayer? Status means, in this case, status means whether the taxpayer is a resident taxpayer in Bangladesh or whether the taxpayer is a non-resident taxpayer in Bangladesh. So if the taxpayer is a resident taxpayer, then he has to pay tax at a rate. But if he is not a resident in Bangladesh, he is a non-resident in Bangladesh, then he has to pay at a different tax at a different rate than the resident taxpayer. Now, Section 17 of the Income Tax Ordinance. Section 17 of the Income Tax Ordinance says scope of total income. Scope of total income. It says that if you are a resident taxpayer, so you pay tax on your global income. So what is global income? Please note, global income means income which you derive in Bangladesh and also you receive from outside Bangladesh. So your global income which comes from across the globe, from Bangladesh and from outside Bangladesh. So if you are a resident taxpayer, then you have to pay tax on your global income. So if you are a resident, but if you are a non-resident, then you have to pay tax on your income which you receive which you earn in Bangladesh only. So there's the big difference between resident and non-resident taxpayer. Again, if you're a resident taxpayer, then you have to pay tax on your global income, and if you are a non-resident taxpayer, then you have to pay tax on your income which you derive in Bangladesh only. If you are a non-resident, then you have to pay tax at a maximum rate. If you are a non-resident, then you have to pay tax at a progressive rate. So what is progressive rate? Progressive rate means income increases, the rate of tax increases. Income increases, rate of tax increases 5%, 10%, 15%, 20%, 25%. Now, the maximum rate of tax in our country is 25% for individual taxpayer. For individual taxpayer, not for other taxpayers. The other taxpayers means corporate taxpayers. There are corporate taxpayers, the companies, they pay tax. So for individual taxpayer, the rate for taxes for corporations or companies are different. We'll be discussing that later period of time. Now, for individual taxpayer, the maximum rate is now 25% this year. So if you're a resident, then you pay tax at progressive rate. But if you are a non-resident taxpayer, then you pay tax at the maximum rate. So now, what is the maximum rate? Maximum rate is the 25%. So if you are a non-resident, you straight pay tax at maximum rate. You don't pay tax at progressive rate. If you are a non-resident taxpayer, you don't get some other facilities which a resident taxpayer gets. For example, a resident taxpayer gets investment allowance, but if you are a non-resident taxpayer, you don't get the investment allowance. We'll be discussing, analyzing what is investment rebate. Now, so you understand that there are differences between resident and non-resident taxpayers. That is called the status of the taxpayer. Now, who is a resident, who is not a resident? So if we refer to Section 2 of the Income Tax Ordinance, Section 2 Clause 55 defines who is a resident. First of all, non-resident. The law says a non-resident is a person who is not a resident. Simple. Non-resident is a person who is not resident. Now, Section 2 says, non-resident is a person who stays in Bangladesh 180 days altogether in the year, in the income year, or 90 days in the relevant income year, and 365 days in the preceding 4 years. So again, resident is a person who stays in Bangladesh 180 days altogether, not continuously, and or that person is also a resident if he stays in Bangladesh in only 90 days in the relevant income year and 365 days in the preceding 4 years. So if these criteria are met, then we can say that you are a resident taxpayer. So after that, will be once we know how to charge tax and the status of the SSC, then we'll start charging tax on the income, and we'll be we'll be discussing the sources of income, heads of income of the SSC to impose tax. So that's the end of the second video. In the next video, video number 3, we'll be discussing the heads of income as per section 20 of the Income Tax Ordinance 1984. Until then, goodbye. See you in the third video. Thank you very much.